Can Bitcoin and the US dollar peacefully coexist in our financial future? Most people assume it has to be one or the other, but today's guest challenges that notion entirely. LeClair, head of market research at Metaplanet, has been pioneering innovative Bitcoin treasury strategies in public markets and brings a unique perspective on Bitcoin's integration into the global financial system. We'll explore 4 key arguments: how Bitcoin could reach $100 trillion while the dollar remains functional, why the dollar's persistence might actually benefit Bitcoin, how real-world payment systems already demonstrate this dual system potential, and why this transition might take longer than anyone expects. Before we continue, if you enjoy these breakdowns, hit the like and subscribe button for more TFTC content. Full episode linked below. In our first clip, Dylan explains why Bitcoin reaching astronomical valuations doesn't necessarily mean the death of the dollar, and his perspective might surprise you.
I think that honestly the dollar can stay around a lot longer than people believe, even amidst a large inflation burst. It's sort of almost like a derivative of your response, but even with a massive devaluation of the yen and the euro, I'd say the euro is a little bit different, but the dollar in particular, I think Bitcoin can be $100 trillion, and there people could still, $100 trillion or equivalent thereof in value, and people could still be, transacting in dollars, and whether globally or not, or whether it's enforced at the point of a gun is another story.
This powerful insight from Dylan challenges the common belief that Bitcoin's success must come at the expense of the dollar's existence. He's laying out a future where Bitcoin could reach an astronomical market cap of $100 trillion while the US dollar continues to function as a medium of exchange. This isn't just theoretical thinking, it's grounded in historical precedent. Throughout history, we've seen multiple forms of money serve different purposes simultaneously. Gold, for instance, acted as a store of value for centuries while various currencies handled daily transactions. What Dylan is suggesting is a modern parallel to this system, where Bitcoin serves as the premier store of value while the dollar continues its role in commerce. This addresses our first key argument about Bitcoin's potential valuation. It doesn't need to replace the dollar to reach these heights. Instead, Bitcoin can thrive by excelling in its role as a store of value while the dollar maintains its utility for transactions. And this brings us to our next crucial point. There's actually evidence suggesting this arrangement might be beneficial for both systems. Let's hear Dylan explain how Bitcoin could act as a stability mechanism for the broader financial system.
That kind of thesis of, Bitcoin as this release valve mechanism to appreciate and to kind of absorb all of the excess monetary premium and currency debasement as the dollar remains this kind of this medium of exchange. That thesis can be directionally correct. The fiscal situation is obviously irreparable. Both sides are going to run historic deficits in peacetime, hopefully peacetime, but that's where we are right now, and they're still doing it. So, yeah, I think there's just this realization. It's the stuff. It's a bit surreal to see the stuff that the crazy conspiracy theorist Bitcoiner side of the world has been saying for years. Being said on a daily basis from the high wigs of finance like BlackRock, right? Who have stacked like 360,000 Bitcoin. They've stacked a MicroStrategy and a half in the span of 9 months or so. And obviously it's not one entity, it's other people's funds, but Bitcoin has reached a point, and I would say you could really argue that was a long time ago, the threshold or point of no return.
This concept of Bitcoin as a release valve for monetary pressure is absolutely fascinating and addresses our second key argument about why major financial players might actually prefer a dual system approach. Dylan explains how Bitcoin can absorb excess monetary pressure from the system while allowing the dollar to continue functioning as a medium of exchange. Think of it like a safety valve on a pressure cooker. It doesn't prevent the cooking process, but it does prevent an explosion. This mechanism could actually help stabilize the existing financial system rather than destroying it. It's a sophisticated perspective that suggests Bitcoin's role might be more complementary than competitive with the current system. Sup, freaks? This is a read you don't want to skip. Everyone knows about Fold. It's the app where you can earn the most Bitcoin rewards for everyday purchases. Fold now lets you double stack rewards with gift cards. Use your credit or debit card to buy gift cards and earn both credit card rewards and sats. Fold gift cards help you grow your stack with every purchase. If you're not shopping with Fold gift cards, you're leaving sats on the table. New users get a 20,000 sat welcome bonus. Don't leave sats on the table. Go sign up now at foldapp.com/Marty. Now you might be wondering what this looks like in practice. In our next clip, Dylan shares a real-world example from Japan that perfectly illustrates how different payment systems can coexist efficiently.
And in Japan, unlike in the US where there's just like 3 or 4, there's like a little card when you go and check out, and it's like all the different pay services. And there's like Apple Pay and MasterCard and Visa. And then there's like 20 companies I've never heard of in Japan that are like payment service providers or whatever. And all of them seemingly, I mean, I didn't see all of them, but they're all instantaneous, right? And, there's not a tax liability or whatever it may be. So, I would say it's a different case for all the third world currencies. I would say it's a different or developing market. I would say it's a different case for even like the euro, which is attempting to kind of artificially keep this currency block together. And it's this bureaucratic monstrosity.
Dylan's observations about Japan's payment landscape perfectly demonstrates our third key argument about how multiple payment systems can thrive simultaneously in the real world. What's particularly striking about this example is how it shows that having numerous payment options doesn't create chaos. It creates efficiency. When he describes seeing 20-plus payment services all working instantly at point of sale, he's painting a picture of what the future could look like with Bitcoin and the dollar coexisting. Just as Japanese consumers don't need to choose just one payment method, future consumers won't need to choose between Bitcoin and dollars. Each can serve its own purpose. Bitcoin is a superior store of value, while dollar-based systems handle daily transactions. This real-world example proves that our financial future doesn't have to be an either-or scenario. And this brings us to perhaps the most crucial question: what's the realistic timeline for this transition? Let's hear Dylan's perspective on why this evolution might take longer than many expect.
As for the timeline of when the last dollar is transacted, there's liabilities that go out for 20, 30 years. And so whether we make it that long or not, it's not my place to say. But all that to say, I would be surprised if we're talking in 10 years and the dollar still isn't, being issued by Congress. How much that dollar purchases is a different story entirely. But I think that this game can persist for a long time, despite Bitcoin, appreciating by an order of magnitude, 2 orders of magnitude.
This final insight from Dylan addresses our fourth key argument about the timeline for this dual system future, and it's remarkably pragmatic. When he points out how financial obligations extend 20 to 30 years into the future, he's highlighting a crucial reality that many Bitcoin enthusiasts overlook: the incredible inertia built into our financial system. Think about all the mortgages, bonds, and pension funds that are denominated in dollars. These can't simply be switched to Bitcoin overnight. What's particularly insightful is his point about Congress still issuing dollars in 10 years, but with different purchasing power. This suggests a gradual evolution where Bitcoin and the dollar each find their optimal role in the global financial system. It's not about a dramatic overthrow of the current system, but rather a methodical integration of Bitcoin alongside it. What timeline do you expect for Bitcoin and the dollar to coexist? Let me know in the comments. I read every single one. And if you found this discussion about monetary evolution interesting, you'll want to watch our breakdown about how Bitcoin developers and market forces shape Bitcoin's future. Click the video on your screen now. Don't forget to like and subscribe for more daily content. Thanks for watching. Stay humble. Stack sats.